So, very warm welcome. You're watching the weekly edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Sneha. What a pullback, what a bounce back we've seen. Nifty pulled back nearly 100 points to close near 24,900. Bank Nifty, what a broad range we saw today. 800 points of range that we've seen on Bank Nifty, and this was led by majorly by the Axis Bank and the kind of move that has come back in private banks. In fact, the entire banking space was buzzing on the back of the earnings posted by Axis Bank, and that's what the complete outlook for banks have changed now. Talking about the weekly data, but then this is a third consecutive week when Nifty has closed lower. It lost nearly 0.5%, 0.4% very precise. But banks on the flip side, they rebounded quite sharply and they gained. Nifty Bank itself gained nearly 2% this whole week. And out of this, major of the move, nearly 1.5%, that came in today itself only. And then this is all led by the private bank numbers. Now all eyes are on HDFC Bank also post the stellar kind of numbers posted by Axis Bank. Midcap, however, they lost nearly 1%. Small cap though gained nearly 0.5% this whole week. But majorly this week was driven by the earnings, and that's what we saw the impact coming on the auto pack, which is the top sectoral loser also, because Bajaj Auto, majorly the drag came in because of the Bajaj Auto weak comments and the festive outlook announcement that they made during their comments with their Nifty earnings, with their Q2 earnings. But then what a move which came in from IT Pack, talk about Wipro, even ICICI Bank, TechM, SBI. They were some of the gainers on the Nifty. And of course, the worst performance which came in from Snehi was on the back of the earnings. You talk about Bajaj Auto and even Nestle, or even for that matter, the auto stocks, they were trading in pressure this whole week.
Absolutely. Earnings have been rather mixed if you see coming in this time from at least from the Nifty group. You had some expectations, good ones coming in from Nestle, but that one did not do well, and that stock was also tanking over the course of the week. You also had an entire basket of stocks that, particularly in Friday's trade, they've not done well, and that is the entire city gas distribution space on the back of that APM gas being cut by 20% now from the earlier 72% level. So that's been taken on the chin by a couple of stocks, the likes of IGL, MGL, Gujarat Gas. They've not done well at all. Also, you have the entire RBI action of the rap on the knuckles that they've done with the NBFCs coming into play. One of them was Asirwal Microfinance, and on the back of that, the parent Manappuram Finance was losing away. So that's been a big loser over the course of the intraday trade as well as over the course of the week as well. But largely that is what the market has shaped up to be over the course of the week. You've had brokerage notes, you have earnings, you have events happening internationally. Remember, you also have the ECB that's once again gone ahead and cut the rates as well. So lots of action happening globally. FII, DII trends continue. DIS continue to be buyers. FIS continue to be sellers. Lots has been happening for our markets as well. But let's bring the discussion, let's get it going forward, and let's bring on board Rajesh Palvia, Head Technical and Derivative Research at Axis Securities, and along with him we also have Mr. Ajay Bagga, market expert, joining our show. Good afternoon, gentlemen. Thank you so much for joining us. Rajesh, going to come. Okay, I feel like we have a little bit of an error connecting with Rajesh. Mr. Bagga, I'll come to you first. Give us a sense of the kind of moves that we've seen over the course of the week when it comes to the market. What's your take about the volatility that we've seen the entire week in the red? Last trading day of the week, we've seen some mild recovery. Do you think this is the start of a recovery, or this is just a one-off good day that we're seeing?
I think it would very much be the start. We have lost about 7 billion in terms of FI outflows in the recent few weeks. So clearly the issue has been negative flows, a slowing economy, RBI still staying quite hawkish, food inflation not allowing RBI to cut in the imminent MPC meets, and corporate earnings disappointing on top of that. What we have seen, any negative news flow is seeing accentuated selling in those counters. As you were mentioning, the gas companies or the fintechs or the MFIs being hauled up by RBI, we are seeing a very strong moves downwards. So clearly, when markets are at such elevated levels, there is very little tolerance for missing earnings and for bad news. And that's what we are seeing. but that in turn lends a lot of strength to the market. So there is no euphoria. In fact, there is a lot of skepticism in these markets, and everybody is very skeptical that FIs are taking out, promoters have sold more than 2 lakh crores. IPOs and OFS has taken out another 2 lakh crores from Jan 1 to October 15th. Despite that, these markets have held up. That is the positive. The lack of euphoria and a very healthy skepticism, that's lending a lot of strength to these markets. And I'm sure that going into Diwali, and then once the big event of the US presidential election is taken out, I think global markets normally tend to do very well. US markets normally are weak going into the US presidential election, and then they rally quite strongly. And on the back of that, Indian markets could also find some legs. So this could be the start, as you mentioned.
So this could be the start of the trend reversal, the kind of move we saw in markets. But then is that what the technical levels, the technical charts also support? Let's bring in Rajesh Palve also in the show. Rajesh, hi, welcome to Your Trades. Help us explain, because 24,700, 24,800, they were the crucial support up till now. But then the kind of PCR ratio we slipped into yesterday, of course, heavy call writing on the upper strikes. Has the trend really changed, or is it just a short-term trend which has changed? What is it? Is the only earnings which has lifted the sentiment? It can get hampered again if numbers doesn't support the sentiment.
So Priyanka, yes, we were into oversold trajectory, and some pullback has been taken place from those oversold trajectory for Nifty as well as for the Bank Nifty. Most of the large cap stocks have witnessed a profit taking in this volatile scenario. Looking at the data setup, still call writers are very well intact at the strike of 25,000. So I think that may act as a major supply zone for this pullback action. So until Nifty not crosses about 25,000 level and not close about not manages to close above those level, I think again on the higher side we may attract some supply pressure or selling pressure around 25,000 level. So I think on this pullback, I think those who have already bought at lower level can hold on for next target of 25,000. But again, that level needs to be reviewed again, because still call writers are there, and I think till they are not covering their position, I think pressure would be there in the Nifty around those level. On the downside, as you mentioned, 24,700 is now critical for the Nifty to hold the ground for further more pullback. Again, if we slip below to 24,700, I think this trend may continue further on the downside, and then possibly Nifty may slip towards 24,500. That's the next major put based concentration. So still, market is not in the comfort zone for holding the aggressive bullish bets in this scenario. 24,700 to 25,000 would be the range for next couple of days. Either side breakout or breakdown will decide the major direction for the market from here onward. Yes, pullback is taking place because of we were in oversold trajectory. Nifty almost tried to took the support from its 100-day moving average, but still we are trading below to 50-day moving average. So still trend is on the weaker side. For Bank Nifty, yes, there is a strong pullback in today's session, and week on week again, yes, Bank Nifty has posted some gain around 1.5%. And in Bank Nifty, yes, we are now managed to cross 50-day moving average. So here there is a positivity in terms of trend, and most of the large cap bank from the private as well as from the PSU has shown recovery from their oversold trajectory. So maybe in the Bank Nifty, we could see some outperformance compared to the Nifty this time. And if Bank Nifty holds 52,000 level in the coming week, then possible rally can extend to 52,600, 52,700 zone also, as some shorts are already covered in Bank Nifty as we closed above 52,000 level. So for Bank Nifty, those who are already long can hold the position or fresh long can be added at this level with stop loss of 51,700 for upside target of 52,600 to 700.
Trade for Monday, first trade that Rajesh has identified for us is, of course, you can take a long call on banks. There is a possibility of further short covering move. We stay for a short break here. When we come back, we both of the guests are with us. Don't go anywhere. We have more questions to put up and more answers for you. Welcome back. You're watching Your Trades, and we have Mr. Ajay Bagga and Rajesh Palvia to help us understand where are we heading towards now. Mr. Ajay, I wanted to come to you, Mr. Bagga, because you know what we have seen this week, and in fact the weeks prior. This is the third consecutive week that Nifty has underperformed its global peers. We've closed lower, and major the reason is that FI flows moving out of India and China story that remains at the center stage now. Now, in fact, the record FI selling, what we have seen on index futures, that stands at our highest level now. It's past the March levels also. Now, is this trade done, or is it more? It has more legs? China story more to play in coming days, or are we done with that story? What is your view shaping up on that?
Yeah, as we saw on Friday with China, once the People's Bank of China came out with more talk of stimulus and actually released about $110 billion for investment in the stock market, we saw the Chinese markets going up by more than 3% on Friday. So we are going to see a continued China story. Will that be at the expense of India? I don't think for much longer. That marginal reset that had to happen is probably 50-60% done, and maybe another 5 billion odd goes out. But the good news is we have absorbed it. So if 7 billion has gone out, 7.6 billion has come in terms of DIIs, and that amount is lying there. And as the new month comes in, another 2.5 billion odd comes in just from mutual fund SIPs, and then you have EPFO, insurance, and other formats bringing in money. So I think the drivers for that FI outflows have been threefold. One is, of course, China was the trigger. Second has been a stronger dollar. So the EM flows pool itself with the dollar rising for the last 3 weeks in a row, and the dollar index sitting at more than 103. That has had an impact. And the third, of course, has been issues with the Indian market itself, be it valuations, be it slowing growth, be it not that great earnings to justify those valuations. So it's a combination. But the long-term investment thesis is very much there. And as I mentioned, as the US presidential election goes through, I think you could see a turn in EM flows again. It will all depend on who wins. Right now, Wall Street is favoring a Trump trade. So we are seeing the trades happening as if Trump comes back. And that's very positive for the dollar. And India is suffering to some extent based on that. So let's wait and watch for 6th, 7th November when there'll be some clarity on the US presidential election. Normally the US market goes up and India should get a boost with that big event out of the way.
Okay, well, that's the view coming in. Rajesh, I want to get your view on the frenzy, if we could call it, that we've seen in the entire banking space. Now, banks typically for the largest time now, for the longest time, they haven't performed. They haven't performed that much, and a lot of underperformance has been seen. If you take a look at the moves that we're seeing over the course of the week, Nifty Bank, PSU Bank, both of these baskets are doing particularly well. Do you think that it's now time for banks to start shining bright again, given that the underperformance has been too much for far too long, and also because RBI is increasing its regulation on NBFCs, and banks would be a safer way to play the entire financial space? What's your view there?
So definitely in my opening remark also, I mentioned that, this time we could see some outperformance from the banking space as Bank Nifty is positioned, on the bullish side compared to the Nifty. And the way Bank Nifty has shown some short covering action and managed to cross 50-day moving average. And in this up move, most of the private bank as well as the PSU bank after a consolidation or from the down move has turned and showing a strength on the near-term structure. So we believe that, yes, banking space could, continue for the more upside, and maybe we could see good rally in some of the private bank as well as in the PSU bank. So I think yes, one can focus on this sector. From private banking space, I think ICICI Bank, Kotak Bank, and Federal Bank, these three banks are looking very attractive in terms of technical structure. So here there is a possibility that we may see further rally to continue in the coming week. And from the PSU Bank, SBI has also shown good traction from the lower level, and almost now stock managed to cross its immediate supply zone of 820 on a closing basis. So I think if SBI able to sustain above 820 level, I think here also we could see a rally towards 845 to 850 kind of zone. Another the PSU bank like Bank of Baroda is also looking promising, and here also we are bullish, and we believe that 260 to 265 could be the next target for Bank of Baroda from the PSU banking space. So here also one can deploy some long trade with stop loss of 242.
That's the recommendation coming in from Rajesh. Mr. Banka, very quickly, since there were muted set of expectations from quarter two earnings, and that actually failed to impress in the initial days, but then the way Axis Bank numbers came in, IT pack numbers came in, what is the surprise element that you found in these two packs, or maybe which sector you feel that which will post better set of numbers, more upgrades to come, and maybe on the flip side more downgrades to come from?
Yeah, Priyanka, I think one big disappointment is the consumption basket. We had really thought that, with the festive season starting off, you would see some revival of the rural demand. As per the management commentaries, that seems to be postponed by 1 or 2 quarters. So that is going to be a drag. So we need some kind of monetary or fiscal boost into the private consumption. We'll see the GDP numbers, but those will be with a lag. The leading indicators are not looking too good for private consumption, which is a big chunk of our GDP. The government capex is reviving, so the capital goods companies should do well, and the providers into that ecosystem, the power companies should continue to do well. Banks, I think, got hit a lot, and they seem to be turning. Technically, also Rajesh mentioned levels. So I think private sector banks, especially, we could see a resurgence in these next 2 quarters. IT is still a hold. It has done well over the last few weeks. But after the results, I think there'll be very few buyers into IT. So we can wait and watch for now. No need to jump in right now to IT.
That's the view coming in on how to play the entire IT space. But Rajesh, I mean, a market like this where we're seeing something new happen in the market every day, would you concur that it's a stock pickers market and it's time to get stock specific? And if so, what are your picks? What are you spotting? Where are you seeing value heading into the next week?
Definitely, it's a stock picking market only because it's not a broad-based market, a broad-based rally which we are seeing in the market. Very select pocket and very few stocks are moving even from the sector. So I think some of the stocks where we are focusing, as we discussed about the banking space. So I think private bank, we are holding bullish view on ICICI Bank, and the way ICICI Bank has consolidated at 50-day moving average, and in today's session we have seen a strong buying action. Stock managed to give breakout of last 4-5 days consolidation. So I think we believe that ICICI Bank can take a lead from here, and possible target towards 1300 we can see in ICICI Bank in short period of time. So one can buy this stock with stop loss of 1240. Another stock that we like is Bombay Dyeing. Again, here also we have witnessed breakout of almost 7-8 week consolidation, and the stock managed to give breakout of its previous swing high of July 2024. The way stock has attracted the buying interest throughout the week, we believe that Bombay Dyeing can extend its gain in the coming week. Possible target towards 264 we can see, and one can buy with stop loss of 243. And the third stock is from the metal space, that is National Aluminium. This stock is outperforming to all metal stocks at this juncture, and the way stock is holding the ground at higher level. Though stock is in ban period for F&O, but on the cash segment one can initiate buy, and we believe that here we could see further more traction on the higher side. National Aluminium is buy for upside target of 243. with stop loss of 226.
All right. So these are the two recommendations, stock-specific recommendation. That's what Rajesh also believes with. Thanks very much, Rajesh and Mr. Bagga, for being on the show with us, sharing your insights. Thanks very much. But moving on, Zomato was one stock which was in news today, and that's because on the back of the fundraiser the company aims to raise. But then Karan Taurani, who's a senior VP for Elara Security, he shares the reason behind the Zomato fundraise and what will it mean for even Swiggy IPO. Let's listen.
The reason for this fundraise is very clear. One is, I think, they want to take advantage of the situation. Investors really want to invest in these high growth internet names. There is a lot of interest here. Swiggy IPO is around the corner. So I think they would want to make the best of this opportunity. The market opportunity is quite huge here in terms of expansion, in terms of scale. It could take everyone to a surprise in terms of what the kind of scale quick commerce market could reach, over the medium to long term from a perspective. So I think they want to be kind of well prepared for that situation as well. The third thing is that, of course, they want to have a bigger cash pile versus competition. That's what we believe. Clearly, if you look at Zepto's recent rounds of fundraise, they would be at close to more than $1 billion. Swiggy, has got about 6,000 crores, and with the latest fresh infusion from the IPO, they would also breach, the $1.2, $1.3 billion mark. And that's where, Zomato is today, potentially. So given the kind of market leadership situation that they have, both in the food segment and the quick commerce segment, I think, if they're able to raise more money, and they're bound to have, more cash versus competitors because of their size and scale.
Well, absolutely. It's a rather well-timed fundraise coming in for Zomato this time, because it's just their first fundraise in the last 3 years, also coming at a time when Swiggy is about to launch its IPO. And Karan, what he told us earlier is also that this could take away some of that institutional investor interest into Swiggy towards a well-established company like Zomato. So that was an interesting point to note out today as well. Yeah. Very well-timed for Zomato. But on that note, we're completely out of time on this weekly edition of Your Trades. Thank you so much for watching.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.